Good morning, everybody. Thank you for attending the Place Your Trades Network Spaces covering energy policy. The Spaces is brought to you by Tradeovate, which has built a custom web app dedicated to trading CME Group's new daily option contracts. You can use the link in my Twitter stream to go and get the Tradeovate app for free. I also write a weekly blog for Place Your Trades on markets that you can find at placeyourtrades.com. And just a reminder, the Vegas giveaway for the Money Show is today at 4 p.m. ET. So if you entered, be sure to log on to see if you won. All right, let's get started. I would like to introduce everybody first, as usual. We have Ralph Schollenhammer. Ralph is an assistant professor at international relations at Webster Pacific Private University, where he teaches economics and political science. Besides his work in academia, he regularly contributes on national and international broadcasts, including Sky News Australia, The Hill. He also writes commentary on political and economic issues in newspapers such as the Wall Street Journal, Newsweek, Unheard, Spiked, the Jerusalem Post, the Washington Examiner, and the American Spectator. Next, we have Leonid Mironov. Leonid is currently the head of natural resources at PACAT Capital Management in Hong Kong. He's a strategist, portfolio manager, analyst, and PE advisor with over 15 years experience in emerging market natural resources across blue chip investment banks, specialist investment bank funds, and PE firms. He possesses a detailed knowledge of metals, oil and gas, and soft commodities in Asia, Russia, and FSU. His particular focus is on the impact of energy transition and ESG on the natural resources sector and the economies as a whole, both the involving impact on the resource space directly with scope 1 to 2, 3 emission curves, shifting value within the resource space from energy to metals, as well as the entire value chain impact analysis from cradle to grave. And then we have Abdulaziz that is up here. He is a prominent public study figure on energy and climate issues and a public speaker for major energy issues for the Chamber of Commerce, municipalities, and other entities in the Middle East. Geophysical modeling specialist with an MS degree in geophysics from KFUPM and higher education diploma in geophysics and the oil business from the Institut Français du Pétrole. For the past 15 years, Abdulaziz has been an avid observer in the E&P activities in the MENA region. He reports daily on regional competitors' activities in the upstream sector, as well as reporting quarterly updates on updated business activities globally and in the region, including monitoring of all oil and gas discoveries in the Middle East, North Africa, and global frontier areas. Unfortunately, Robert tried to download the Twitter app to do spaces. He's never done spaces before and got locked out of his Twitter account. So Abdulaziz has so graciously decided to accept my invitation to come up here today. All right, so let's get started. We'll start with Leonid, since we've never had you as a guest before. I kind of want to talk about, since you focus on Asia in particular, I want to talk about first kind of your macro 30,000 feet above view about the energy landscape in Asia. What kind of policies are working and what kind of policies are not?
Tracy, thank you very much for inviting, first of all. And I think a lot of people, especially in America, maybe don't pay enough attention to this to the Asian space. But in Asia, energy is a daily need. Like as a whole, outside of the Middle East, obviously, especially the Far East, South Asia, Southeast Asia, North Asia, they're all short energy. So figuring out ways of securing energy supplies has always been very high up on the agenda of all of these economies, especially since they started developing and industrializing quickly. And as of the past 15 years or so, I think the Chinese example has been leading the way in a way of bringing together a very sensible economic policy and pro-growth measures and measures of ensuring the stability of energy supply, all the while trying to be the worship of the world, for lack of a better word, and also trying to clean up the messes of sort of policies from the 90s that just focused solely on growth and not on the sort of the pollution aspect of things, right? And now we have an entire region of countries that is having a very rational approach to energy, right? It's not driven by a focus on some slogans or a focus on some commitments way down the line, although of course they all made it, but that's not what's driving it at the moment. These are energy systems that are looking to develop, and then depending on where they are in this developmental cycle, their priorities obviously change. So as you look at China, obviously, for my money, they have the most advanced energy grid in the world right now. And they are continuing to integrate different sources of energy, and they continue to be the biggest importers of coal, but also they're now becoming the biggest importers of LNG. They're becoming a big importer of Russian pipeline gas. They're big importers of Turkmen pipeline gas. They're also big in solar and wind, and they will likely remain world leaders in installations of solar and wind, but also nuclear, because their approach is we need energy and we will continue to do whatever it takes to make sure that we have energy available to our citizens. And I'm obviously leaving out hydro, but they're also world leaders in new hydro projects. And then you look at places like Pakistan or Bangladesh. They are also building out infrastructure as much as they can, but obviously from a much lower level. But they're obviously focusing on coal because that's the sort of thing they can get their hands on, but also LNG, right? Again, because it was available for a while. And places like India, right? And this is the theme across the board, that the focus is very much on enabling energy, right? On making sure that there is enough energy to have that economic growth that they're all sort of clamoring for and banking on.
So where do you think that we see, where should we be looking at in terms of growth areas for demand? And where do you see the largest demand shift coming from country-wise within Asia? And do you think that demand will offset, say, the declining demand in, say, Europe, for example?
In one word, yes, it will, simply because it's way more people, right? And so the maths is actually quite straightforward there. But I think that you don't even need to look for new areas of demand, right? The continued growth in existing areas of strong demand growth will continue to be thus, right? You look at places, again, like Pakistan, like Bangladesh, these are 150 million plus places. So they will need a lot more energy. Like Bangladesh only has about like 26 gigawatts of installed power generation capacity for 160 million people. Now, obviously, there's an awful lot of growth that will go on there, right? Pakistan has about, 46, 47 gigawatts, something like that, right? So all of these places are set to grow, and where they will grow will be traditional sources of energy. So it's oil, it's gas, and it's coal. They will continue that use, right? I think on Monday, the new numbers for Indian growth projections came out on coal consumption side, and they're set to increase coal demand by 400 million tons a year by 2030, right? And I actually think that maybe is a little bit conservative. So we will see demand growth across the board on every energy source in most places in Asia, outside of maybe Japan and Korea.
And then the million-dollar question that everybody always wants to know is, with China coming kind of back online, zero COVID that policy is swept to the floor. What are your projections of when and how much will we see China demand coming back, not only for, say, oil and gas, but also for metals?
I think this is $1 million question, exactly as you said, because it's not straightforward and it's not linear, right? And I think this is much has been obvious because just as we've seen the opening become an actual theme, almost immediately after that, we started having second thoughts, or there were conflicting pieces of data. And I remember this big Bloomberg article about how Chinese people aren't actually spending the government money that they were given, but instead paying off like long-term debts and credit cards and whatnot, right? And I feel like this is natural because 3 years of COVID, one of which in complete lockdown almost, right? It is bound to have an distortionate impact on any kind of data series or the way that people think and the way that people prepare, right? And the way people live their lives. So I think it's entirely natural for this process to be non-linear, but I think the direction is very much up and to the right, right? And we are beginning to see all these data points, right? I mean, we've seen the industrial production number out of China earlier today, the strongest number in 12 years, right? Phenomenal, right? All this stop-start rhetoric, I think it's maybe sort of missing the point a little bit. It's not the stop-start nature of the process, it's the stop-start nature of the way they would measure it and what we get back in terms of, anecdotal evidence, but also some of the numbers that, the government is providing. So I believe that it's already started. I believe that we're going to have a very strong year in China, 5.5% growth, probably headline, maybe even a little bit ahead of that. I think in terms of energy, the situation is even maybe a little bit more distorted because a lot of Russian supply that we are seeing now physically entering China, it might not be quite as well reflected in some of the official data coming out, both of China and also the international trade flows. I also believe that maybe we are going to see a similar picture in metals. So, for example, there is talk of this big order from Trafigura to Rusal to ship 150,000 tons of aluminium to China at fairly short notice, right? Things like this will likely continue no matter the sanction state. But the question is how clandestine these shipments will have to be, right? And obviously, as of today, they don't have to be. They can be reported, and nobody can do anything to China. But as sanctions news tightens, and if the West chooses to continue with the path they're on in terms of sanctions, it's not impossible that they might want to introduce almost a total ban on purchasing energy and, maybe even metals from Russia. I mean, unlikely as it is as of today. So this is something to be prepared for. I think the murkiness of data is only going to increase. So I'm saying this to say that there is no need to freak out about any one data point. If something comes in a little bit weak or a little bit below expectations, all of that needs to be taken as part of a total cohesive move from China to ensure there is stability of supply of energy, and they will forego clarity and they will forego disclosures before they forego imports and before they forego actual purchasing.
Excellent, thank you. And so we'll come back to China in a minute. I want to move to Europe for a second, but we will come back to you, Leonid. So Ralph, first of all, kind of walk us through everybody's interested in nuclear. So kind of walk us through this nuclear alliance formed by France. What are the implications? Who are the countries that are sort of against this? And what are the possibilities of success?
Yeah, with great pleasure. So I think the first observation that has a little bit of a humoristic content to it, I Googled all the headlines, including Germany, on Bloomberg over the last 3 months, and almost every second of them had either the word surprising or unexpected in it. So over the last 3 months, we constantly got news about either unexpected contraction of the German economy or surprisingly higher inflation than originally expected. We got the new numbers today. So once again, the inflation expectations were lower than the actual inflation. So, and most people agree that this is mainly caused by energy prices. I mean, BASF, right, the German chemical giant, said very openly that one of the reasons why they are dissolving parts of their production in Europe, but it's about 2,600 jobs, is because energy prices are simply too high. And as we've also found out, and Leonid has kind of alluded to this a little bit, I mean, the energy crisis made one thing very clear. There are two reliable sources of energy, and it's coal and it's nuclear. Now, coal is the German option. They have mothballed their previous coal-fired power plants, and they have kind of put them back online very effectively last year. But other countries that don't have the coal option are going to move back to nuclear. We see it in Poland. We see it very heavily pushed by France since they have a lot of nuclear. We see it now in Sweden. Italy is considering returning to nuclear. So we see it's about 11 countries who have formed this alliance that had their first formal meeting today that kind of want to push very, very strongly for the use of nuclear, also for the production then down the road of hydrogen with nuclear. But there is a push that we have not seen to that extent in Europe, I would say, since the 70s. And what is even more interesting, public opinion is very much behind it. Now, even the Danish, and Denmark has been very anti-nuclear and very pro-wind. Even there, a majority of the population is now pro-nuclear. So I would not underestimate the potential success of that coalition. And maybe to add on one quick thing. We must not forget, I looked at the most recent numbers. Over the last 14 months, beginning in November 2021, Europe spent 1.2 trillion on energy alone. And Germany is kind of the big player here with 440 billion on energy alone. And this is not a sustainable model. So Europe has to do something in the realm of energy. They need to produce more domestically. They want to electrify as much of their industry as possible, right? You all hear the talk about hydrogen, but it's of course also heat pumps and other areas that depend strongly on fossil fuels in the past. And if you want to do this, you need electricity, right? If you want to, which I think is never going to happen, but if you want to fulfill the dream of going electric in transportation by 2035, 2040, you need, in addition to a reliable grid, you need to produce the electricity. And as far as we can see, nuclear is probably the only way how this could at least partially be accomplished. So I think the likelihood of Europe returning to nuclear currently, I would say, is significantly higher than the alternatives. There is one wild card in all of this, and I'm going out a little bit on a limb here, which is Germany still plans to exit nuclear, but they also plan to build 25 new gas-fired power plants. Now, I think the big question is how long will the war in Ukraine go on? I know current estimates say it's going to be at least throughout the year, maybe longer, but I'm not sure if the recession is really going to be as hard as it could be in Europe and maybe also in the US, if pressure is not going to grow on the Ukraine to come to some form of deal. So this will not be received very pleasantly by Ukrainians, but I think there is a chance that maybe some form of ceasefire or some form of extended peace negotiation might start taking place. And as the energy minister of Qatar kind of ironically said, but I think he was not wrong, he said a couple of weeks ago, in international politics, we are very quick to forget and forgive. And I have a sense that if that should happen, Europe would be more than happy to return to their arrangement with importing energy from Russia. And again, as Leonid said, everybody needs energy. It's just there is no way around it. And if Europe plans to rely primarily on imports from the United States, it's just very expensive. And as a last point, if you allow me, the LNG report, kind of the global LNG report by Shell came out, I think, yesterday or a couple of days ago, and they predict a very, very tight LNG market in the future. So if the European plan is to rely primarily on LNG, you can do this, but it's going to be very, very expensive. And if you're already in a recession, or technically I would say we are in a stagflation, the economy is contracting, inflation is still high, I have no other way to describe it, and then you add on ever-increasing energy costs, I think at some point this becomes just very, very difficult to maintain. So my expectation is both a return to nuclear, but also I would argue potentially a way to work around the very sanctions Europe has imposed on Russia itself, or potential pressure on Ukraine to come to some form of ceasefire to allow a more intense, a higher volume of energy flows to Europe.
Okay, and then because we were kind of talking about this before, you and I, so you have Europe kind of monetary policy butting heads with fiscal policy, right? So you have Lagarde pleading to Euro members to stop offsetting monetary policy with national fiscal policies. So Is there a way to kind of resolve this traffic jam, or does this just lead us down, sort of a stagflationary environment?
Well, I think there are two kinds of problems. One is that, and this is a little bit in the European political tradition, European politicians always think that it's a demand-side problem. So if there is a recession, if there's a problem, it's always, it must be a demand-side thing. So the automatic reaction is always to pump money into the economy from the fiscal side. But as you correctly pointed out, Christine Lagarde was almost pleading with European states to not constantly counteract monetary policy by the ECB with their own fiscal policies. And I think what we find out now is a little bit the limits of European Union kind of organizational structure is because this is very comfortable for European politicians. They can pursue an almost populist form of fiscal policy while blame the ECB with the higher rates for other potential problems or a potential recession. So the United States have a certain advantage there because despite the independence of the Fed, at least there seems to be an agreement that both the government and the Federal Reserve are pulling into the same direction. In Europe, currently, the ECB and local governments, or national governments, pardon me, are pulling in opposite directions. And this is going to be a problem in the future because by doing so, and this is something, Tracy, that you elaborated a lot on in recent weeks, is we are destroying our supply base, right? The deindustrialization in Europe is real. There are many smaller companies, medium-sized enterprises in Germany that many, I assume, of our listeners haven't heard of, but they're very crucial as suppliers for the larger car manufacturers and others. And they say they either close down or they move production to the US and other places. And these things are not easy to restart. So 2023 is going to be in some areas a make and break year for Europe. And I understand, I often get the criticism, well, you only talk about Germany. That is true. But on the other hand, Germany still is the largest economy in Europe. So if Germany goes down, there is a problem for all of Europe. And the argument that many say, well, but what about Poland? What about others? Yes, Poland is doing well, but it still cannot replace Germany. Neither can Italy, neither can France.
So in that respect, I mean, you have seen the EU be, or Brussels, be very outspoken against the United States Inflation Reduction Act. And very fearful that that's going to pull industry over to the United States because of all the incentives. And so can you kind of tell us what Europe is doing to kind of counteract that, and is it enough?
Well, kind of the European answer is what they call the European Green Deal. And there again, I fear that, which is also a little part of the Inflation Reduction Act in the United States. But I think in Europe, there's significantly more ideology than actual industrial policy in the plan. You can definitely see the French handwriting, which is this idea of an almost corporatist approach towards the economy, where the government tells companies what to do. That can work, I guess, to some extent. But the problem, again, when we compare it with the United States is we tend to underestimate that if we compare the structural health of the US economy and the European economy, I think the US is still in a better position. I mean, just to give you a couple of numbers and examples here, right? There is only one European company among the world's 10 leading investors in research and development, and I think 6 of them are American and the rest is in Asia. If you look at the major inventions or kind of the major growth fields over the last 15, 20 years, mostly it came out of the United States, right? Not really necessarily out of Europe. We had the shale gas revolution in the United States. So if the US kind of pump money into their economy, there is actually something they can pump it into. I mean, there's going to be the usual grift as well as it always happens with government spending. But I think the conditions in the United States are significantly better than they are in Europe. And the other point is, there was a recent headline, I think it was on MSNBC, and they interviewed a bureaucrat from the European Union. And it was almost ironic because he said Europe is on the brink in becoming the world leader in social media oversight. So apparently this is the vision within the European Union, is that our product of the future is basically regulation. And I think this is what you see. And this is also what companies in Europe justifiably complain about the most, right? They say the energy crisis is one thing, but regulation is and bureaucracy is really what's breaking their neck. And just to take another example, there's this idea now. They talk to a small company in Germany that makes I don't know the English word, but they make like a very key components for machinery. And they say now the German government and the EU, they want them to tell them the carbon footprint of every single step along their supply chain. And they say they cannot do this, right? They would have to hire extra people just to take note of their CO2 emissions along the supply chains. While we see in the United States currently with the SEC, the exactly opposite move, right? That they say we have to tighten the ESG rules. We have to tighten these regulatory rules in order to allow companies to kind of act in a freer fashion. So I think there's the fundamentals, and I'm sorry I didn't mean to go on such a monologue, but I think the fundamentals in Europe are really problematic. We have I think still good engineers. I think there's good human resources here, but we have created a framework and conditions that make it very hard for them to be as productive and successful as they could be. And that's the advantage of American federalism, as I think most of the listeners know as well, right? If I don't know, if Minnesota and California and New York, quote unquote, I mean, no disrespect, if they go crazy, people can move to Tennessee, people can move to Florida until these other places find their sanity again. In Europe, unfortunately, these options are not as available. And I think this is going to be the problem in the year and years to come.
Yes, 100% agree. Regulatory issues are ridiculous in Europe. And then we will get back to Europe. I'm going to move to Abdulaziz. I kind of wanted to, if you can, touch base a little bit on Canada energy. We had Schultz, went to Canada, asked for LNG, didn't get it. Japan went to ask for LNG, didn't get it. Now everybody's gone to Mexico, Qatar, United States, other places. So how do you think this is going to affect the LNG industry for Canada? And, can they kind of resurrect this industry, with either pipelines to the west or how difficult is it going to be for Canada?
Thanks, Tracy, for having me here. Great to be here among these esteemed crowd, and a pleasure to also go along the line of where Ralph has mentioned part of the LNG or the EU struggle with LNG is policy-based. And we're seeing a similar pattern in Canada, but the situation with the Canadian LNG is the logistics with providing the LNG carriers, as well as providing the liquefaction plants required to answer for the desired amounts, the volumes, the requests that are coming towards Canada. But bear in mind, Canada has a different geology than the Permian Basin. It does not have the similar geology that the Permian can produce from the fracking industry. And in addition to that, Canada has a strict policy when it comes to the ports, building newer LNG plants on ports, and then you have to deal with the logistics of transporting from the wellhead to the ports for international markets. I would also want to say that other than the policies, we're seeing how inflation is affecting the cost matrix of future purchases. LNG contracts tend to be 5-10 years plans, but not many clients we're observing, not many clients want to go that far. Most clients now in the market are interested in spot deals than they are in long-term contracts. And that adds to the complexity as well of how Canada wants to put that investment, given the transition plans that Canada wants to achieve in such a short period of time.
So are there any solutions, or do you think that Canada is kind of stuck in a gridlock of energy policy, so to speak, with kind of the Trudeau government versus, say, the Western provinces, particularly Alberta.
What I really think is that the current policy does not see a merit in making big plans for LNG, given that there could be other alternatives, both through the transition as well as a further expansion down south from the United States exports of LNG. So Canada does not see a merit there. It also doesn't see a merit in developing infrastructure that has a long-term return on capital at this time, given how committed Canada is to the transition plans.
That makes sense. So kind of have a dilemma there. Kind of a moving continent now. So let's talk about, if you can, for us, the Caspian Sea region a little bit, because people are talking about the way that is the only place where EU as a whole can really look for long-term strategic connection. So, can we talk a little bit about Azerbaijan and gas or green electricity to Europe? And then what about Central Asia, like Kazakhstan, Turkmenistan, Uzbekistan, and any kind of policies Europe has in pursuing those markets?
Well, it's very clear. Is this question to me, Tracy, or is it somebody else? Sorry.
Yes, to you. It's to you. Yes.
Thank you. So it is very obvious that there are a lot of resources that are kind of locked into Central Asia, including major sources of uranium and other required material for nuclear power plants. Of course, first comes to mind is Kazakhstan. And the situation with Kazakhstan and as well as the former Soviet Union states is that they still fall under the sphere of influence of Russia, of course. But you see, we come also to another situation where not only is it logistical, but there is also an element of policy as well as access. Central Asia has been struggling with resources access to international markets since the 1990s. And the only solution that has been proposed is through pipelines or relying on old Soviet infrastructure for exports. That brings me to another subject, and that is what is happening with exports of Russia, actually, of oil and gas, and how that plays in over the next 24 to 36 months. I would like to remind everyone that there was an announcement from Alexander Novak regarding the reduction of production of 500,000 barrels a day. But is that to actually target prices or not? Well, if we go to the new taxation regime that was introduced 2018 by the Kremlin on the Russian producers, the plans of the taxation system would incentivize newer investments into green fields of Russia and not rely heavily on the older oil and gas fields for production and faster depletion of reserves. And so that is partly an internal oil and gas policies of Russia that wants to make use of using this period to pump more investment into green fields of Russia. Adding all this equation together, what we would get is possibly more investment in green fields, but that also kicks in the timetable and the time frame of delivery into international markets to later times.
So do you think that, I don't know if you want to kind of explain this new tax that that they just enacted in Russia, basically, because I think this production cut was really to not to raise oil prices globally, but to narrow that spread between Russian crude grades and Brent, for example. But they also have a new tax plan that actually adds more taxes onto barrels. So ultimately, they end up still selling for over the price cap right now. Really, do you have thoughts on that, or do you want to go into that a little bit?
Absolutely. So what has been the target of this reduction is to increase the taxation on the current levels of exportation of oil and gas of Russia, and having more revenues for the state than the producers, as long as they're producing from brownfields. And so this taxation regime would push the local producers of Russia to go greenfields instead of brownfields. And what that does, of course, it would make the current production of Russia get into markets possibly at higher price to complement this effort to go towards greenfield. But what we're noticing as well, Tracy, is that what we're seeing is two separate oil markets. One oil market that goes between sanctioned production into China and India. We don't really know how much or how this is sold, what pricing mechanism is involved, or even what kind of exchange is going on, whether it uses currency or it uses other resources such as gold or of course exchange of other goods and services or barters. But in the general sense of this flow, it gives us an oil market that is not as clear to those who monitor the pricing mechanism as it is with the futures market. So there is a big separation today than we were about 3 months ago on knowing how much in volumes is being sold at what price. And that only adds to the complication of the tale of two separate markets with two separate pricing mechanism and two separate logistics and delivery mechanism.
Yeah, exactly, I completely agree. And then I'll move to Leonid. Kind of, do you have any color to add on that? And then, because it seems increasingly we are seeing this sort of gray market, right? Because Russia, has their own fleets, of vessels. They have they're supplying their own insurance, and so what does this mean for the oil markets in particular? And then taking that a step further, how is that affecting Asian markets?
I actually think this is fascinating because, like you say, there has been a clear decoupling of, the quote-unquote clean energy market, clean oil market, and the sort of Russian-sourced market, with all sorts of funny things along the way. So, for example, Germany has started importing some of the Kazakhstani crude through the existing Soviet pipeline infrastructure for Druzhba and the like, right? You have the CPC pipeline going across Caspian to consumers in Europe. And again, that is theoretically, this should be non-Russian oil. And for as a general, there is, right? But both these routes are effectively controlled by Russia. And at some point, if they really wanted to, they could really unplug them. I mean, not without consequence, obviously, but nevertheless. At the same time, you have, like you say, the build out of the shipping fleet. And if you remember, round about this time last year, there's a lot of commentary about how if we were to stop buying Russian crude, Russia will not have a way of shipping it because nobody's going to touch it, nobody's going to send the vessels in. And over the course of just 1 year, this has largely been addressed. Like the growth in this gray shipping market has been quite phenomenal. I mean, mostly because it's not for the first time that the shipping industry has to adapt to something like this. They've done a very good job of, clandestine transfers before, but it's just obviously the magnitude is much higher now. I think nevertheless, the trend is the same, right? There will be people who are okay to buy Russian oil, and people who aren't. And those who are okay to buy it will pay less and will have a cost advantage over the ones that don't. Also, there is also a question of availability, right? Is there going to be enough non-Russian oil to go around for all the willing buyers of it? And what is that going to do to the prices? And again, my perception is that it's going to lead it all much higher. And to touch on what Abdulaziz was saying earlier, right? You will see that there is also an overlap. If you map these countries on a map, if you color them different colors, you'll see the overlap with another map that would represent, people who are okay buying Chinese IT products and people who aren't, right? That is actually the crux of the collaboration matrix between Russia and China, because there are a lot of issues that remain to be ironed out. It's not all sort of roses between the two of them, but it's quite clear that China is very reliant on Russian energy at this point in time, but at the same time, it's very happy to be paying lower prices than it would otherwise. And by the same token, Russia is very happy that there is Chinese products that they can fall back on, even if they're not happy about being unplugged from sort of a broader global trade. And this sort of love-hate relationship of sorts continues to blossom and grow despite all the complications, and it engulfs more and more nations into it. So, for example, Malaysia is a hub for transfers and for redomiciling of crude, right? They're becoming more and more reliant on the practice, right? And then you look at India, and there was a big article again recently, I think it was Monday, about how Western banks need more and more confirmation of the fact that, the price cap is being adhered to by Indian buyers of crude. And I know nobody's saying that they should stop buying it, that they should that they should definitely adhere to the cap. They're saying that they should have better confirmation of it, which is, in itself is a very different notion. So all this means is that slowly the world is continuing to bifurcate. And within all of this, I suppose some people see Russian position as somewhat recalcitrant here, and their unwillingness to maybe engage with the rest of the world. But I actually see it from a slightly different angle. The moment when China and India stop treating this as a one-off, and they stop thinking of it as a great opportunity to save a couple of dollars per barrel by arbing away the fact that they can in fact buy these barrels when others can't. And at some point, if it continues for long enough, this will become an essential part of their supply-demand balance, both in China and in India, and then maybe in the rest of Asia and parts of Africa. It is at that point in time Russian position will in fact strengthen significantly, because the market becomes dependent on those barrels. And the fact that the rest of the world's production outlook isn't particularly rosy, and it's unlikely that too many other places will come in and replace these Russian barrels elsewhere, kind of means that this is more or less inevitable. It might take longer than we expect, but eventually the outcome has to be that Russia becomes such an integral part of the fuel balances of all these emerging economies in Asia, that any notion of decoupling or any notion of stopping this will just not would be completely unfeasible for both sides of the equation. And I kind of think this is what the Russian side is banking on. Make sure that by the time that the decision has to be made, the Asian partners are not in a position to say no.
And I think you could argue that for North African countries as well, right? Because a lot of energy is being diverted, or that was going to the EU is being diverted to North Africa, via Turkey now and whatnot.
Yeah.
And so,
Absolutely, and of course, in North Africa, you have a surprisingly large contingent of Russian players, especially in Libya, controlling quite a few of these flows as well, right? Which I just find fascinating.
Absolutely. I kind of want to change gears here a little bit and kind of talk about China and renewables and the global dependence on China for renewables and kind of what this implication is, because say the West, or I should say, let me backtrack. Let me say the United States particularly is kind of at head to head with China right now. They're obviously having problems to have, ever since the quote unquote trade war started. But what does this mean? That being that China basically produces most of the metals and rare earths, etc., for all of these renewables. If the West wants to move away from China for this, where are they going to find? Where are they going to
Well,
find these?
Well, I think the short answer is they can't, right? Because let's not forget, on the rare earths, they're not so rare, right? I mean, the whole point in the supply chain for rare earths is the refining, which is ugly and messy, and nobody wants it in their backyard, right? So the reason why China ended up with all these facilities was because nobody else would have them, right? To begin with, it's not like China has a special geology, although they do have a couple of really nice. Sources of metals. Nevertheless, like the point was, they were ready to bite the bullet and put these unpleasant facilities domestically. And here we are 20 years down the line and they're reaping the strategic benefit of it, right? And it's not like it's fixable in the short term. What I'm so on the on the rarer earth side, I think there is nothing that can be done in the immediate future except slowly domiciling these places. But in the Western world, where do you even put these things, right? So it probably would have to be some kind of an emerging market sort of place that would agree to it. The West would then underwrite. And at this point, I wouldn't even know where to begin looking for that sort of place because it's ethics come into this, and also neo-colonialist rhetoric comes into it, and all of a sudden you can't. It's not so easy to just pick a place and just say this is where we're putting it, right? So, and obviously it's a non-starter anywhere in Europe or the US, right? I mean, once people look at the dynamics of like a gallium producing facility, right? I mean, there is no way anyone would agree to live, within 100 miles of that sort of thing. I mean, it's much nastier on paper than like a nuclear power plant, and those are having a hard time getting approvals, right? Having said that, what can be done? So, like lithium, for example, is quite interesting because you can, right? Because you first of all, a lot of it is in Australia, is in Chile, in the triangle there. But you look at what China is doing on the lithium side as well, right? There's an awful lot of domestic raw material production as well as processing, right? So China is not standing still. China is developing every resource they can at the time when they can, right? So they weren't doing it maybe 15 years ago, but starting from about 2012, 2013, a lot of money went into geology, and a lot of money went into finding these places and figuring out how to get them to production. And now you get companies like Chihai Salt Lake, right? I mean, ostensibly fertilizer producer that has now become a big 100,000 ton a year lithium producer, right? And you look at all of these Chinese companies that were looking at making the move into lithium, and just you blink and boom, here they are, almost ready for sort of full scale production. This is not something that the Western world was able to match, not just in terms of committing the resources, but also in terms of streamlining the permitting, streamlining the production process. So, unfortunately, I think for many, there is not much that can be done in the next sort of 5 years. Like, you have to start today. I mean, that's you know, like the old saying about the trees, right? The best time was 20 years ago. The second best time is now. And I think this is the sort of situation the West is in terms of all this critical metals and the metals processing infrastructure. But even if you make a decision today, getting it across the line is not going to be easy, given the current political climate.
Absolutely. So, you know, as you know, we talk about decoupling supply chains and bringing supply chains home, particularly in the West. You know, it just seems that right now that's just next to an impossibility. I mean, if you look at the United States alone, it takes 10 years just to get a permit, right? And that's after all your legal battles.
Yeah, exactly.
And
And then somebody comes about and says, you know what? Like, consider all these Scope 3 emissions, right? And you know, I've been looking at them for a while, because it's kind of insane when, if you're a miner, right? Somebody tells you you have to make sure that you know what your customers are doing with the stuff that they bought from you, when your customers are under no obligation to actually disclose to you what it is they'll end up doing with it, right? If you think about all the recourse that plaintiffs have in the US, but also in Europe, right, to stop you from carrying out developmental work on your mining assets, it's kind of insane. I'm sort of surprised anything gets done, right? I mean, in the States, and yet, I mean, there is slower progress, especially in places like Nevada, right? You do see some, but I mean, it's just, Tracy, it's not looking good.
I completely agree with you. I've been outspoken on this matter. And then I had another question, one last question, actually, because it just came to my head about China. And how do you think that, you know, the illegal property sector is horrible right now? And I think that a lot of that earlier, you know, kind of when that property collapse happened, weighed heavily on particularly metals, but also energy. And so, how do you think that, you know, and it's still not in great shape at this point. So, how do you think going forward is China going to address that situation?
Well,
in terms of energy, obviously.
Well, I think first, like, if you think back to 2001, right? Sorry, 2021. What was the energy challenge that really threw everybody for a loop in China? That was the fact that hydro stations weren't getting filled anywhere near required level for operations, right? And the knock-on effect has been unplugging of aluminium production and steel makers here and there, but mostly aluminium took it on the chin, right? A couple of copper smelters and tin, but mostly aluminium. If you look at how China has looked and what sort of lessons that sort of have been learned from all of this, is A, that they can actually unplug these things without too much impact on anything, but two, the supply side is easily controllable, right? I mean, let's sort out the demand side first. But and with that, you have to work with legislative levers, right? You have to figure out what you're going to do with the property sector. Full stop, right? We've seen a big decline in starts. We have seen a big decline in transactions. We've seen some decline in prices. Although again, right, the quality of the data there is, you know, is what it is, right? But clearly, we've seen a deceleration in the property sector, let's call it that, right? Ever since the 3 red line policy has been introduced in 21, and especially when it was enforced in 22, and especially after lockdowns and whatnot, right? All of it has created this really convalescence of negative factors for the property sector. And of course, with it goes demand for all sorts of things, like you say, energy, metals, etc. The question is there, what sort of a demand is there onshore China for additional property construction? And I think the answer is non-zero, right? We still have about 400 million people that need rehousing, right? And for all the talk about millions of units that have gone unfinished or have been held in effectively investment accounts for many people. Yeah, sure, all of this is true, and these are wrinkles that need to be worked out. But nevertheless, the government's focus on delivering more livable space remains, right? There are still more apartments that need to be constructed and more people that need to be, whose quality of life needs to be improved by moving them into modern accommodation. How do you reconcile these two targets? And I think this is one of the key tasks for the 20th CPC, right? I think on the second planetary session, as I made direct references to this, they need to figure out what they're going to do with the property sector and how to make sure that the people who benefit from this are going to be the lower income cohorts, right? So to me, all of this signals the same point. There is a focus in China on making sure that income distribution doesn't get too out of whack, which the easiest way to fix this, like number one, is hukou reform. This is the permit, like residential permits. Like when you live in a city, if you don't have this hukou stamp, you can't use like the government provided healthcare and education. So and like in Shenzhen, for example, it's a 14 million city, and I think that's only like 3 million hukous have been issued there. So it's a big deal, right? Once this is sorted, lower income guys in particular will not need to have to pay for healthcare and education. That'll be a big deal. But the second big deal is to make sure that government has a role to play in provision of housing. Now, again, because China is a socialist/communist regime, we can talk about it quite openly. This is, this is their policy approach. This is what they kind of stand for. So you can expect them to start looking at provisions for the lower income classes. It's not clear how they're going to do it, but what I think they need to work out over the next 5 years is a transfer from local governments to the low-income families. And one of the easier ways of doing is through real estate, through either subsidized or free, either rent or transfer ownership. Right? Again, the details of that need to be worked out. I can't be sitting here saying it's a straightforward thing. No, there's an awful lot of regulatory issues that you need to overcome. You need to figure out what you're going to do with investors into developers and how that's going to get cleaned up, if at all. But I think this is the vector. This is where they need to get to over the next sort of 4 to 5 years.
Excellent, thank you. So we'll move to Ralph now, because I kind of wanted to come back to Germany a little bit, come back to European manufacturing. So we're seeing, BASF, we've seen VW, some other small suppliers shifting production to China and the US because of high energy prices in Europe, for example. But, if we look at China, for example, so China's buying cheap oil and gas from Russia, and German companies are shifting to China. I mean, is this not counterproductive to sanctions? And what is the implication of all of this production moving out of the country or off the continent?
Well, I think BASF said it quite nicely, because when they made the statement that they're going to move production to China, they also announced, but our European customers must not worry, because they will be supplied from our factories in, I think one is in Louisiana, one in South Korea, and of course one in China. So the idea, I think, of many of these companies is to produce in China and then re-import to Europe, or as some smaller companies said, that they're going to start producing potentially exclusively for the Chinese market. And the other point is, I think that they are pursuing a kind of a double strategy, which from their perspective is not stupid, that they say they're going to plan to move production, but until they can do it, they're going to try to get as many subsidies out of the German government as possible. And I mean, to some extent, this is actually working. So I have to admit, all the complaining, which I do as well, about the deindustrialization of Germany and the end of manufacturing, industry, let's put it this way, is not doing as much much as it could to prevent it. So they have made themselves somewhat comfortable to work under the protection of the state, which prevents new companies from coming up due to all the red tape and bureaucracy, while at the same time threatening to leave Germany and therefore getting subsidies, which in the end are never enough to actually keep them, or at least some of them in Germany. So this is I guess we would say, not necessarily a particularly loyal or patriotic strategy by German companies, but it is what it is. A second part, kind of a little bit connecting what Abdulaziz and Leonid said, I'm not entirely sure if Europe hasn't seen, or if the world, we potentially have seen in some areas the end of the renewables hype. And I think this is also going to, of course, play into the matter of manufacturing in the area of renewables. I just looked it up yesterday. 87% of PV photovoltaic in Germany came from China. And I mean, 87% is a quite substantial number. But it's becoming increasingly clear, despite the high promises, renewables are not reliable enough. If we look at which energy sources are reliable, we end at domestic energy sources, and very often that's coal. In the case of France, that's nuclear. So I think this is growing in importance. This new nuclear alliance points into that direction. And the other point is that even the environmental movement itself is turning in some areas against renewables. Just as a quick anecdote, I think that some of you probably heard this. I mean, no other than Greta Thunberg is currently protesting against the construction of a wind farm in Norway. We have similar movements in Denmark. We have southern Germany, where people demonstrate against expanding grid lines from the north to the south to bring electricity from offshore winds to the south. So we see all these developments that I think we probably have reached peak renewables, and we will see much more a return or a sustainability in the areas of coal, in the areas with a renewal in nuclear. So I think this could add another twist to the story. And there's one other thing we haven't touched upon, and maybe Tracy and you guys can say a little bit more on this, which I think is going to be important, and that's the US dollar as a potential wrecking ball for the European economy. I mean, we talk about the provision or the supply with energy in terms of gas, oil, and other areas. But of course, I think one of the big unknowns is what's going to happen with the dollar. And I think this could potentially be a much bigger threat to the European economy than many policymakers realize at the moment.
Well, I mean, I agree. I mean, it's not like the U.S. in the past has not, Yellen's kind of let the dollar float higher to counterbalance inflation in the United States, but that obviously is exported to the rest of the world, since most energy is traded in dollars, and as well as a lot of goods. In that same vein, what do you think? What do you see as, European energy policy? It seems like there's a big duality going on right now between, what they want to do and what reality is. And so how do you see that resolving itself?
Well, basically, Europe has three options. Option number one is, which I think is secretly what everybody hopes, that the war in Ukraine ends as soon as possible and we can return to our mutually beneficial energy relationship with Russia. That's option number one. Option number two is that Europe gives up its resistance to exploring and drilling for its own energy. We know, for example, that Germany would have significant natural gas reserves. We have the gas field in Groningen in the Netherlands. Austria, believe it or not, would have not huge, but usable lithium reserves. Spain would have rare earth. So there would be plenty of resources if you could get the permits to actually mine them. So this would be option number two, to really try to make Europe into somewhat of an energy producer themselves. And option number three, which I think is the second most likely after option number one, is that they say, all right, we're just going to rely more and more on the United States. So everything that came in the past via pipelines will in the future come via shipping lanes, which could work. So I'm not so much worried about the lights going out in Europe, but of course it is significantly more expensive. I mean, there can be no doubt about that. If you bring oil, if you bring potentially at some point coal, because Europe also imported a lot of coal from Russia, and if you also import gas all via tanker fleets, this is just going to be more expensive than doing it via pipeline. You can do it, but in the end, the industry and consumers are going to pay the price. So inflation then will naturally remain very high. So I think everybody hopes for number one. Everybody dreads number two, and many think that maybe number three is a possible alternative. But again, my personal preference would be number two. And don't get me wrong, mining is a dirty business. Energy is a dirty business. But I think it's worse if you don't have these resources, and that the ECB can simply print money to buy it. Well, we all know that's not working because, as Tracy mentioned, a lot of energy is traded in US dollars. So the United States hypothetically could do that because they can, quote unquote, print energy, but the Europeans cannot do it. So these are the three possibilities I see for Europe. And at this point, I don't really see a fourth one. Maybe one other one real quick would be, but both Leonid and Abdulaziz mentioned this as well, Kazakhstan and Central Asia and Africa, like all of this sounds very exciting, but just to say two things. Africa has a very strong demographic upwards trend. We know that countries like Nigeria have already said they're going to use a lot of this energy for themselves. By the way, something similar we have also heard with relating to natural gas in Kazakhstan. And the other thing is, well, Central Asia is tremendously geopolitically unstable. So to say, oh, we no longer rely on Russia, we're going to rely on Azerbaijan, and we're going to rely on Kazakhstan and other Central Asian nations, that seems smart at the moment. But I think on the long run, this is going to be the area when, if there ever is going to be a conflict between Russia, Pakistan, China, India, kind of in these very high tension area of the world, you once again bet on an unstable region for your energy needs. That doesn't strike me as particularly smart. And something that maybe Abdulaziz can say a little bit too is we no longer pay that much attention to what's going on in the Middle East, but political stability has been higher there as well. So this is another potential powder keg. So I really don't see on whom Europeans for long term want to rely if it's not either themselves or the United States, or basically, closing both eyes and say, we know what Russia does is horrible, we condemn it, but we need to find ways for their resources to make it to the European market. I mean, which it still does. Just as a very quick number, for example, LNG from Russia to Spain increased by 45% because they don't get as much from North Africa, particularly from Algeria anymore. So Russian energy continues to arrive in Europe, but as Leonid also mentioned before, it's just via grey fleets and more middlemen and all these kind of things. But again, it makes it more expensive, and thereby also the European economy becomes less competitive and European consumers become poorer. So if we go through all these possibilities, at the end of the day, if Europeans want to remain an economic powerhouse, if they want to remain the standard of living that they currently enjoy, the only real option is to start producing energy on their own. Sorry, that took longer than anticipated.
That was great. That was fantastic. Thank you. And then we'll bring it full circle since you mentioned Abdulaziz. Let's move to, because we really haven't talked about the Middle East or GCC energy policy at this point. And it seems that, I'll have him answer your question. And then what I wanted to also ask him is that, GCC nations basically, they have wanted, they're looking to pursue renewables, but they've never backed down on noting that we're still going to need fossil fuels. They're still going to be producing fossil fuels. You have Qatar, for example, that's by 2027 will have the largest LNG, or the largest natural gas project in the world coming. So GCC is still looking at fossil fuels, and so talk to us a little bit about Middle East energy policy and their stance and how they are handling it, and how it's perhaps better or worse than everybody else.
Well, I think the GCC thinks about alternatives, especially solar and wind, as lost resources, since this area gets a lot of sun exposure, as well as gets a lot of possibly higher consumption during the summer, and higher demand, of course, for electricity, for cooling and shading, and necessities of more power that is better used and better utilized through alternatives and keeping oil and gas, particularly oil refined products for exports for higher returns on capital. And so GCC has, since the Vision 2030 was introduced by His Royal Highness the Crown Prince, it has been a foundation of Vision 2030 to move towards alternatives, especially solar, to change the energy mix of Saudi Arabia, and that kind of followed suit with the UAE and the rest of GCC. Let's be reminded that nuclear is a new extremely welcomed guest in the GCC since the Baraka nuclear plant was in operation by the UAE in 2021. And I know for sure that this is definitely something that most other GCC nations would like to adopt, especially for power generation. In addition to these renewables, there are other resources that are not being utilized, especially in Saudi, including geothermal power generations. And that leaves a lot of barrels ready for exports, as well as leave a lot of barrels ready for the upcoming refined capacities that are already planned for by 2027. So when you put the picture all together, there is a new energy mix in the GCC, very different than before. I would like to address something that both Ralph and Leonid had kind of touched on, but I would like to first give a reminder for everyone that what the current bigger picture about the global economy is kind of designed around 4 pillars. Number one, deglobalization. Globalization is at its worst situation for the past 15 years today. The second pillar is inflation, inflation, inflation. The third pillar is, of course, higher rates, higher interest rates in the financial sector. The fourth pillar, of course, is advantageous markets. Markets currently are extremely advantageous, and everybody is trying to take advantage of these conditions. What is the very common thing about this is Europe is the most affected. And Ralph had touched on, monetary policy, monetary and fiscal policies, and how they're kind of coming at odds sometimes. But I would like to remind that Europe has to put up with something very different than the past 20 years, and that is imported inflation. That is imported inflation as it uses more dollar-priced energy resources, as well as more expensive energy resources, more expensive LNG than natural gas coming from Russia. And so these 4 pillars are shaping a new outlook, but markets are becoming extremely, extremely advantageous for the players.
I wanted to just back up a little bit because you mentioned nuclear in the GCC, and I know a lot of our listeners are very interested in nuclear via uranium. Everybody wants to trade that. So what do you think? What do you think of the nuclear potential in that region? And do you think that is a viable market? And do you think it's a growth market?
Well, another reminder, about 6 to 7% of the global uranium reserves exist in Saudi Arabia, in the geology known as the Arabian Shield. And so these resources of uranium are available for the region. It just has to play against the economics of cheap available oil and gas resources in the region. So the use of these resources would be better utilized to be used for local consumption, local electricity consumption. And another thing, now that I remember this about the GCC policy, the GCC policies have shifted from looking at this picture from resources type into how to operate sectors by sectors. And so electricity is becoming the bigger player in GCC, and then mobility. In the past, it was mobility first and then electricity generation, but not anymore. That kind of shifted in the GCC countries, principally in Saudi, to move towards resolving bottlenecks in electricity mobility sector by sector, instead of looking at it as what resource is needed to operate the economic machine.
Ralph, did you have a comment?
Yeah, just a real quick one, because I think Abdulaziz made so many fantastic points and I think some very, very important reminders. And I think this is completely underestimated, the kind of blessed situation that some Gulf countries find themselves in. It's not just that they have fossil fuels. They are, if we look at the map when it comes to kind of the solar radiation, they are perfectly positioned for solar energy. And now they're also stepping into nuclear. So we really have to, this is something, again, I think that Europeans don't realize. If I would be a European company and I would be in an energy intensive area, why not move production to Saudi Arabia? Why not move production to another Gulf state, right? We don't really see them at the moment as potential manufacturing hubs. But I think given the development in the energy market, that is a possibility. If we look at the number of graduates in engineering at Arab-speaking universities in Saudi Arabia and others, their students are at least as smart as European ones, and I think to some extent probably also American ones. So I think there's a lot of potential there, and this is what bothers me so much, or what I find so worrisome in the European and also a little bit in the US case. If we remember the cancellation of the Keystone XL pipeline, we have a certain lack of imagination that this is not the 1950s anymore, where production takes place in Germany and Michigan, and the rest of the world is just a Lucas by. We have China now, of course, since a long time. Indonesia is a country that I think is going to play a bigger role in the short term. India, of course, but also the Middle East. Again, we have this imagination of the sheikhs and their oil riches, but there is no need to underestimate, or we shouldn't underestimate them also being producers in the future. So I think those were a fantastic point by Abdulaziz that are completely ignored, I think, very often in the debate on these issues.
I think one of the more important comments that was ever made by His Royal Highness the Energy Minister, Prince Abdulaziz, is that he also mentioned we would like to use solar not only to satisfy local electricity consumption, but to use solar to compete in the international markets for green hydrogen exports and green hydrogen competition. He also mentioned that it is forecasted that it is through Saudi solar and wind capabilities that we will possibly get the lowest cost for generating hydrogen, green hydrogen, and exporting to international markets. So it comes down to not only growth, but also to competition at a larger scale in the upcoming energy scene, especially if hydrogen usage becomes more efficient and there is a new infrastructure that is capable of handling hydrogen at larger scale. I think there was a lot of interest from Germany and France in Saudi hydrogen, and there were a few memorandum of understandings that were signed between Germany and Saudi in that regard.
This is such great information. So we've kind of gone well over the hour. So I don't want to take up a lot of everybody's time anymore because I appreciate you giving up your time to be here today, to all of our guests. But as usual, I'm going to go around to each person and just ask, what are you focused on? What should we be looking at? And is there anything that you want to add that we haven't been able to touch upon? And I'll start with Leonin.
Tracy, well, first of all, thank you very much for organizing this. It's been great. Abdulaziz and Ralph, guys, you've made fantastic points. And I've certainly on the uranium stuff, I learned a lot because I wasn't looking at Saudi as a source of uranium or actually green hydrogen either. This is all interesting and fascinating. But in terms of some of the stuff that maybe you haven't talked about that I think people should be on the lookout for, I think, and this is maybe a little bit controversial, but domestic Chinese production of oil and gas, I think, might surprise a lot of people in terms of the degree to which they can kick it back into growth mode. I think, especially the Sichuan Basin, they're figuring out how they're going to frack it properly. And I know it's been 15 years since they started, and the results have been kind of mixed at best to date. But I feel like phenomenal progress has been made in 2022, and CNOOC in particular would be a big beneficiary of that, and that's one to look out for in terms of news, especially second half of this year.
Excellent, thank you. And Ralph, something that we haven't covered yet that you want to cover, or what should we as investors be particularly focused on right now?
Well, I want to end on an optimistic or a somewhat positive note among all the doom and gloom. I cannot say how long it's going to take, but I think once again, the United States are significantly underestimated. If we take a closer look, I have a feeling that they are reinventing themselves as they have done so many times in the past. I would argue we are one competent, and that's of course a big if, but we are one competent administration away from an economic resurgence of the United States. The dollar is once again so much stronger than anticipated. It shows once again that whenever people look for a place to trust economically for all the problems, the United States are still on top of that list. So I'm very bullish on the United States. And as a European, of course, as an Austrian, I just hope that they're going to drag the Europeans along with them, or even better, that at some point a US administration is going to tell the Europeans, listen, you need to wake up from some of your more ideologically outlandish dreams and become a serious player again, because, the United States cannot, of course, carry all the burden on their own, but I think in cooperation with Europeans, they could. So the end of the West, if you allow me, this is a little bit of a provocative final statement, might be not as near as some think it is, but it will take some work.
Thank you. And last but not least, Abdulaziz, your final thoughts. What should we be focusing on? And please mention anything that you would like to talk about that we haven't talked about yet.
I'll keep it very short. I'll put it this way. Policy and government interventions, if they don't make things easier, they become a liability. And unfortunately, this is what we're observing throughout the world. It's not for a specific region, but now we're learning more and more that this liability is a heavy liability. I'll leave it there, and many thanks for everyone.
All right. I want to thank you. I wish we had I think this conversation could go on easily for another hour. But again, I appreciate everybody's time. I know everybody has other things to do right now. I want to thank everybody for being here and listening to our guests. I want to thank our guests. Please follow them. They're all fantastic. Also follow Place Your Trades Twitter account so you know when other events are coming up. And again, thank you everybody for being here. Thank you to our guests, and I will see you guys next Wednesday.
Thank you, Tracy.
Thank you very much. Bye.
Thanks, everyone.